We know now that in installment, when shares are issued in installment at par, what are the journal entries you have to pass and how is the problem to be solved we have discussed. Now let us move to the issue of shares in installment and at par. So what is the journal entry and how to do the problem, let us discuss. So here is the accounting entries for issue of shares at a premium. Premium on shares may be collected by a company either with application money or with the allotment money or even with one or more of the call money as per the terms of issue. So if the question is silent, then that extra money, that is securities premium, you have to collect along with the allotment money. Okay. So here is the journal entries related to the issue of shares at premium. On receipt of application money, the journal entry will be bank account debited to share application account with the total application money received including the premium amount. So if in the question you have collected the premium amount along with the application money, then you have to write the premium amount also along with the face value of the shares. Then the second entry is transferring the application money to share capital. So our journal entry will be shares application account debited to share capital account, and if you are collecting that premium along with the application money, then you have to credit securities premium reserve also. If you are collecting application premium money along with the application money, then only you have to credit securities premium reserve account. Next entry is for the allotment due. Here the journal entry will be share allotment account debited to share capital account to securities premium reserve account. This is due entry, remember children. And now next the receipt entry will be bank account debited to share allotment account. And in case we have not received the application money from any of the shareholders, they have made an arrear, that will be recorded under calls in arrear account, which have to be debited because this is our loss. Because we are not receiving these calls in arrear, it will be treated as our loss and that will be recorded in the debit side. So this we will discuss more. That is calls in arrears. We will have a separate concept and separate lecture class for this. So at that time we will discuss it in detail. Next is you are making first call due. So first call account debited to share capital account, and if you are suppose you are collecting a premium amount at the time of first call also, then you have to credit securities premium reserve too. Then receipt of first call, the journal entry will be bank account debited to share first call account. So this is the journal entries which you have to remember. Now next let us do one problem, issue of shares at premium and payable in installments. So here you can see that Y Limited is a company who have issued 10,000 equity shares of rupees 10 each. So how much shares are issued? 10,000. And what is the value of one share? It's 10 each at a premium of 2 per share, payable as follows. So you are collecting 2 rupees extra. 10 rupees is already there, plus 2 rupees you will be collecting as premium amount. Now how this 10 rupees is collected? It is collected in installments. You can see here 3 rupees at the time of application, 6 rupees at the time of allotment, and 3 rupees at the time of first and final call. You are asked, here the information is given that all the shares were applied for and duly allotted. So whatever shares, that is we have offered 10,000 shares to our shareholders or public, and they have applied or they have taken those 10,000 shares and they have been allotted the shares what they have asked, or their requirement was fulfilled by the company. So past journal entries, you are preparing the journal entry of Y Limited. So from Y's point of view, have to pass the entry. So children, before going to this problem, let me make it clear that the face value, that is in the question it is given that the face value of the share is 10 rupees and premium is 2 rupees. And you are collecting application money, allotment money and first call. So let us see how this is made. That is, face value of the share is 10 each. 2 rupees is the premium money. So what is the issue price? You are issuing these shares for 12 rupees. Okay. Now this 10 rupees, how you are going to collect? That is, it is given in the question that application, at the time of application you will collect 3 rupees each. Then allotment you will collect 6 rupees. So if the question is silent, you have to collect that premium money from your shareholders at the time of making allotment installment. So this 6 rupees include 4 rupees of allotment money and 2 rupees, which is a premium, is included in this 6 rupees. Okay. So 4 rupees is of allotment and 2 rupees is of premium. Then the first and final call as given to you is 3 rupees. Adding this together, it's 12 rupees. So you know that 2 rupees is of premium, which you are going to collect at the time of allotment. Okay. Now let us do this problem. The first two entries related to application. So when you collect the application money, what is the entry? Bank account debited to equity share application account. Being the application money received on 10,000 equity shares, 10,000 is the issued shares, at the rate of rupees 3 per share. 3 rupees is the amount which you are going to collect at the time of application. 10,000 into 3, that will give you 30,000. Next entry is you are transferring that application amount collected in the bank to your share capital account. So your journal entry will be equity share application account debited to equity share capital account. Whatever amount you have written here in case of equity share application, that you will write in second entry too. The narration will be being the transfer of application money to equity share capital account on allotment. So this 2 entry of application is over. Next entry is of allotment. So as I told you, 2 entries, next 2 entries will be related to the second installment. So in case of second installment, you know that 6 rupees is collected. Out of that, 2 rupees is of premium. Okay, here it is not mentioned that 6 rupees is of premium, but you have to understand that if the question is silent as to when the premium is collected, you have to it is understood that premium is collected at the time of allotment. So in this 6 rupees, 4 rupees is allotment money and 2 rupees is of premium. So let us pass this journal entry first. We are making a call for allotment money. So journal entry will be equity share allotment account debited to equity share capital account to securities premium reserve account, because we are collecting securities premium at the time of allotment. So you have to pass this entry. While transferring the amount, or how you will write the amount? This 10,000, that is the issue amount, 10,000 number of shares which we have issued, 10,000 into how much you are in total you are going to collect from allotment? 6 rupees, that you will show here. So in amount column, in the debit side, you have to write 60,000. Then 2 equity share capital account, that is, as I told you that this 4 rupees is of allotment and 2 rupees is of premium. So the entry is 2 share capital account 10,000 into 4, that will give you 40,000, and 2 securities premium reserve account, that means 10,000 into how much is the premium? 2 rupees, that will give you 20,000. So this is the due entry. You have to write down being the allotment money due. Okay. Now after due entry, that is, you are making call and announcement to the shareholders to pay the amount. Now the next entry will be you got the payment. So entry will be bank account debited, that is 60,000 you received, both share capital amount and premium together you received 60,000, so you will write over here to share allotment account. So by way of share allotment, you have received the money of 60,000 in your bank account, company's bank account, so 60,000. Now next two entries related to first and final call. So this is the due entry, that is equity share first and final call account debited to equity share capital account. Just see here 10,000 into how much is the first and final call? 3 rupees. 10,000 into 3, that will give you 30,000. So this is due entry. So write down in the narration, be in the amount due and 10,000 equity shares at the rate of 3 per share. Now next is the received entry. So one due and one pay. Bank account debited to equity share first and final call account. So whatever you have written in under share first and final call account, that amount you have to post over here also. Be in the receipt of 3 per share on 10,000 equity shares. So these are the 6 journal entries, 2 of application, 2 of allotment and 2 of first and final call account.